Good evening, grade 12s. Today I'm going to do task 4.34 with you and I'll post another video for task 4.35. So task 4.34 is consolidation of the cash flow statement as well as financial indicators. We've been doing quite a few questions on the financial indicators and we have done cash flows in the past. So this should be familiar. Okay, so we're just going to do that together. Generally in exams, the cash flow questions are combined with analysis and interpretation of financial statements. So this is more or less how you would find it in an exam question. However, this question is quite long and it involves quite a few theoretical questions. Obviously in exams you will have much less, and you'll see that when we're going through past papers. Okay, so in 4.34.1 we need to complete the notes of the balance sheet for ordinary share capital and retained income. Okay, so with ordinary share capital, some of the information was already given to you. So this was given to you in the question. 1.5 million ordinary shares. Okay, and also under issued, 1 million ordinary shares at the beginning of the year, 200,000 additional shares at 260, and 280,000 shares repurchased during the financial year. Okay, and then the balance at the end of the year wasn't given to us. None of the figures were actually given in the note. But if we look at the actual balance sheet, we do have a figure for ordinary share capital in 20.1. That would be the balance at the beginning of the year, so 2 million rand. And we've also been given the balance at the end of the year, 1,932,000. Okay, then we've been given a 200,000 additional shares at 260. So if you just calculate 200,000 times 260, you get 520,000 rand. We can then work backwards to find the repurchased value. Okay, so we're just gonna remember we'd start 1,932,000 minus 520,000 and minus 2 million. Okay, so that gives us 588,000. Now we have been told that it was 280,000 ordinary shares which were repurchased. And if you calculate 500, if we calculate the average issue price by taking 2,520,000 divided by 1,200,000, we will get an answer of 210, right? So you can just work that, put that in, okay. And we can then calculate the number of ordinary shares in issue at the end of the financial year. Remember, that's 1 million plus 200,000 minus 280,000 shares. So 920,000 ordinary shares in issue at the end of the financial year. The next one we have to do is retained income. Again, some of this information was given to us in the question. So retained income at the beginning of the year. The net profit after tax was given to you as well, 861,000. Okay, the next line would be the repurchase. Okay, so the repurchase was 280,000 shares. Okay, and if we look at number if you look at which one of the adjustments. Okay, sorry, we'll come back to that. That might be a balancing figure. Okay, then we have the next thing we'd have is our dividends, which would be the interim dividend, the final dividend, and that would give us the balance of retained income at the end of the year. Okay, so retained income at the beginning of the year as well as the end of the year can be taken straight from your balance sheet. So at the beginning of the year, 1,156,000, and at the end of the year, 1,413,800. Now, when you're doing a question like this, or cash with the cash flow, it's quite easy because the balance sheet is already given to you. So the balances at the beginning of the year and the end of the year are given to you, and you probably have to work backwards within the note to find something else. Okay, then we're going to look at the interim dividend and the final dividend. I've already filled in the calculation, and the information I have got it from is number 3. So the interim dividend, 12 cents per share, was paid to shareholders in the share register on 31st August 20.1. Now on 31st August 20.1, the number of shares in issue was the 1 million shares at the beginning of the year and the 200,000 shares which were issued on 30th June. So 1,200,000 times 12 cents, okay, 144,000. And the final dividend, at the end of the year, there were 920,000 ordinary shares in issue, and the final dividend is 21 cents per share. So that gives us an answer of 193,200. You can then calculate your dividends on ordinary shares, and remember that you must put it in brackets. You then work backwards from 1,413,800 to find the repurchase amount. And again, you could then work this out. So we'll take 266,000 divided by the 280,000 shares which were repurchased to get the answer of 95 cents, being the amount over the average issue price. Okay, so that would be the first part of the question done. So task 4.34.1. In 4.34.2, we actually have to use a cash flow statement. And you know that with the cash flow statement, we also have to do the notes. Okay, so we're going to start with note 1, which is the profit before tax. Okay, now the profit before tax, obviously we're going to look at our information in order to find it. We've been given the net profit after tax, which is 861,000. Okay, and look at your information in your question. Number 1, income tax per the income statement for the financial year is 369,000. So to calculate profit before tax, we're going to add back the income tax, okay, to get the answer of 1,230,000. Okay, the next thing we're going to adjust for is depreciation. Okay, and if you look, we've been given information from the balance sheet. We haven't been given much information from the income statement. So depreciation is something that we're going to have to find in another way. Okay, the next thing, so I'm just going to leave that for a little while. I'm going to come back to that just now. And then the next thing is the interest paid. Okay. If you look at number 4, the interest rate on loans is 15%. The new loans were obtained halfway through the accounting period. Interest is not capitalized. All interest has been paid. The loans will be repaid in 20.5. So we have to do a calculation for interest. So if you look at your balance sheet, the loan amount was 300,000, and then it increased to 1.5 million. It says that the new loan was obtained halfway through the year. So to calculate the interest, we'll take 300,000 times 15% for 6 months, and then 1.5 million times 15% for 6 months. Just add up the two answers, and that will give you interest paid of 135,000 rand. Okay, then the next thing is, if you look at the next thing I have here is the loss on sale of asset. The loss on sale of asset is not something you're familiar with, because obviously none of the questions before has had a loss on sale of asset. But if you look at number 6, it says the profit or loss on sale of asset in context of cash flows is for enrichment only. So it's very higher level. You don't normally get it in the exams, but I'm going to explain to you what to do with it now. Okay, and then so let's dealing with the fixed assets, the depreciation, etc. Okay, we're going to do our calculation. Okay, where we do our 5-step calculation for tangible assets. I'm just going to delete this so that, and then we'll go through it as we need to. Okay, so we're going to start with our tangible assets carrying value at the beginning of the year. So fixed assets at the beginning of the year, that was 2,300,000. Remember, this calculation is very important for you guys to know. And then the carrying value at the end of the year is 3,616,400. Okay, then look at number 5. It says fixed assets were bought during the year for 2,216,400. So we're just going to fill that in here at additions. Okay, depreciation, okay, is going to be the balancing figure in this question, right? So I'm just going to type here, and this is the balancing figure. Okay, remember we need depreciation for note 1 as well. Okay, and then we need our disposals at carrying value. So if you look at number 6, it says fixed assets were sold during the year for 200,000 Rand. The cost price of these assets was 500,000 and the accumulated depreciation was 575,000. So to get carrying value, we say 500,000 cost price minus 275,000 accumulated depreciation, and that will give us a carrying value of 225,000. Okay, and all we now do is work from the bottom to calculate the missing depreciation that we need. And this is 675,000, which we're going to put into note 1. Okay, so depreciation 675,000, remember no brackets. Now the next thing is the loss on sale of asset. Okay, so we just calculated the carrying value of the asset that was sold. It was 225,000. Okay, and it's in number 6 tells us fixed assets were sold during the year for 200,000. So there was a loss which was made on the asset, which is 225,000 minus 200,000. Now usually a loss is subtracted to arrive at the net profit. We will be adding it back to the net profit, so 25,000. If you had a profit, you would have subtracted it. Okay, so that's all there is to add in a loss or profit on the cash flow statement. We're then going to calculate our operating profit before working capital changes, which is 2,065,000. Next thing, working capital changes. Okay, our working capital changes will be the inventory, receivables, and payables. Okay, so if you look at our balance sheet, inventory has decreased from the current year to the between the current year and the previous year. Right? So here's your calculation. Remember, if there's a decrease in inventory, okay, the cash effect is actually positive because it means that inventory was sold, cash came into the company. Then we have trade and other receivables. Okay, now with trade and other receivables, we need to always ignore SARS. We also need to ignore shareholders for the we need to ignore SARS income tax. If you look at number 1 of the additional information, it tells us that the SARS income tax balances 49,000 debit for 20.2 and 163,700 credit for 20.1. So that means that for the current year, the SARS balance of 49,000 is included in trade and other receivables. We need to subtract it from trade and other receivables first before we proceed. So we're going to take the 432,000 from the balance sheet minus the 49,000 SARS amount, and then compare that difference to the previous year of 294,000. Okay, so if this is an increase in receivables, that means our answer needs to go in brackets, so 89,000. The next thing we have is the payables. Okay, so we've got some figures again on the trial balance, but we need to remove SARS. We also need to remove shareholders for dividends. Okay, so if you look at number 2, the shareholders for dividends balances are given. And if you look at number 1, in 20.1, 163,700 is included. So we're going to take our 889,000 of this year, subtract the shareholders for dividends balance of 889,000, subtract the shareholders for dividends balance, which will be the same amount as the final dividend, which we calculated here. So our final dividend here was 193,200. We need to subtract that. Okay, so this figure wasn't given to you, and you obviously had to calculate it yourself. We had to calculate it and then use the answer. So 889,000 minus 193,200, this is for this year. Then 923,700 of last year minus the SARS balance of 163,700 and minus last year's shareholders for dividends of 120,000. Okay, that gives us an increase in trade and other payables. So no brackets, 55,800. You can then work out your answer. Okay, for above the block. Okay, and finally we'll work out cash generated from operating activities, which we can transfer to the balance sheet. Okay, so we'll transfer that to the balance sheet. Okay, so 2,172,600. Okay, so now that we're done with note 1, we can then do note 2. Okay, so note 2, remember we're calculating the net change in all our figures. Okay, now this question doesn't have everything split up between bank, petty cash, and cash flow. So we're just going to use the cash and cash equivalents figures on the actual balance sheet. In the current year, it's 70,000. In the previous year, it is 51,000. I'm just going to work out the difference, okay, which gives us 19,000. That's what our cash flow must balance to. Okay, then we're going to do tax paid. Okay, the balance on the last day of the previous year, which is the SARS balance of last year, 163,700. Remember, always in brackets. The income statement amount is the income tax amount, 369,000 given to us in number 1. And the balance in the last day of the current year is 49,000. Remember, this was the debit balance, which means SARS was overpaid, and it will also go in brackets. So the final tax paid answer will be 581,700, which we can transfer to the cash flow statement. Okay. The next note we're going to do is dividends paid. The balance in the last day of the previous year has been given to you in number 2. That is 120,000, always in brackets. The amount in the financial statements will just refer to 4.34.1, which is the dividends on ordinary share amount 337,200. Remember, in exams, if you carry through this figure, even if it's not correct, you'll still get the marks for the carrying forward of the correct figure. The balance in the last day of the current year is the final dividend, 193,200, no brackets. It will only be paid next year. Get 264,000 at the end, which we can transfer to the cash flow statement. Okay, let's go back to the notes. Okay, tangible assets purchase, we don't have to, we'll see if we need to do that. However, we have done this calculation, and I'm sure that's going to help us in the cash flow. Okay, so if we look at this calculation here, we have additions at cost price, 2,216,400. We can take that to the cash flow. Okay, which will be cash flow from investing activities, purchase of tangible assets. Okay, in brackets, 2,216,400. Then we have proceeds on disposal of tangible assets, and this is the price that was obtained on the sale of the asset. So it was sold for 200,000. So that's what we have in here, 200,000. Okay, let's carry on. Right? Okay, let's go back to the top now. Interest paid, which we have calculated. Sorry, in note 1, I forgot to bring it through. Remember that when you calculate your interest amount in note 1, it can go to the cash flow statement in brackets. So 135,000 here, and on the cash flow statement, 135,000 in brackets. This question doesn't have interest received, so we don't have to worry about that. I'm just going to delete it. Okay, we can then work out our answer for the cash flow from operating activities. Okay, moving on to investing activities. We've done the tangible assets. The next thing to worry about is the fixed deposit or the financial assets. Okay, if you look at your balance sheet, there's actually been an increase in the financial assets. So it's an increase in investments. Okay, and an increase in the financial assets means that the company actually invested more money, cash left business, so it will be an outflow on the cash flow statement, right? Then our calculation will be 712,500 minus 690,000. You just put the answer in there. Okay, the next, now we're going to worry about our financing activities. What happened with the shares? Okay, new shares were definitely issued. Shares were also repurchased. Okay, and so if we look at our note 1, you can either, so we can look at our ordinary share capital note here. Okay, shares were issued at 260, so we've got 520,000 rand. Proceeds from issue of new shares. The repurchase of shares. Okay, remember for the repurchase of shares, we would look at the two amounts we used. The one in the ordinary share capital 588,000, so this one here, as well as the one from the retained income notes of 266,000. Okay, so here's your calculation. Remember, repurchase the cash outflow, so the answer would have to go in brackets. Okay, and then let's look at the loan. What happened with the loan? Okay, so the loan, it looks like it has increased. This year it's 1.5 million compared to 300,000 last year. Okay, so that would be proceeds from non-current liabilities. Remember, the bank gives the money, so it's a cash inflow. Okay, so it's not a repayment. I'm just going to delete that. Okay, now you've got these three figures within a block. You can just calculate your answer and place it above the block. Okay, we can also calculate this answer. Okay, we're done with the cash flow. We're now going to work out our answers from the top. So 1,191,900 minus 2,008,900 and plus 866,000 will give us an answer of 19,000. And if you look at our note 2, this is exactly the figure that I said we have to balance out to 19,000. So we are well on track for cash flow balancing. The cash and cash equivalents at the beginning of the year, 51,000. 19,000 plus 51,000 gives us the cash and cash equivalents at the end of the year, 70,000. And therefore the cash flow is perfectly balanced. Okay, so that's 4.34.1 and 4.34.2. 4.34.3.
947 loves you.
Okay. What is the purpose of the cash flow statement? Okay, so there are a few things that you can say here, but the main thing is it shows the cash inflows and outflows of the company. It's classified as into operating, investing, and financing activities. Okay, because CRJ and etc. will also show you the cash inflows and outflows, but this is more of a summary, and also it's classified according to operating, investing, and financing activities, so that at a glance you can see money was received, it was paid out, and what. Okay, 4.34.4. Explain 4 major decisions taken by the directors as evidenced by the cash flow statement. Quote figures to support your answer and explain how these decisions should benefit the performance in the future. Now with this, when it says quote 4 major decisions, we don't necessarily look at the operating activity section of the cash flow, we look at the other sections of the cash flow. And we look at the big amount. For example, we look at the investing activities, tangible assets were purchased for 2,216,400. And we must mention the figures in your answer. Okay, also there was a disposal of tangible assets. Okay, and then new shares were issued, shares were also repurchased, and an additional loan was taken. So these are all the things we're going to mention, but remember to always quote the figures as well. Okay, so the purchase of tangible assets was an outflow of 2,216,400. Okay, so the company is increasing its future profit generation. So when tangible assets are purchased, the company actually is increasing its income generation in future because a production can increase and we can be more profitable. Then there was a repurchase of shares. There was an outflow of 854,000. Okay, so this will affect the dividend payout in the future, and then shares can be resold at a later date. So if the repurchase of shares, the dividend will be less in the future. Okay, it can be sold at a later date for a higher price, and it will ease existing shareholders. There was a loan, there was an inflow of 1.2 million rand. Okay, so the capital and interest repayments will have to be made, and this will affect the cash outflows in the future. So right now it's a cash inflow of 1.2 million, but in future there will be outflows with regard to the interest and capital repayment. Then new shares were issued with an inflow of 580,000. This will affect the dividend payout in the future as there are more shareholders. Existing shares may not be so pleased, but the cash is probably needed to finance the tangible assets. so that's what we can say there. And in 4.34.5, expense and the directors might want to be provided with detailed sets of financial statements. Yes, the shareholders might want the shortened approved form of financial statements. And remember, the directors are responsible for the day-to-day running of the company, and they need to use the information of the financial statements to make important decisions. Okay, so they are responsible for the day-to-day running and are responsible for all the financial information. Okay, so the shareholders may only be interested in the dividend payout, the net profit, and also major decisions that are taken by the directors. They would not be interested in all the figures. Okay, then 4.34.6 refer to the table of financial indicators that will be presented. Calculate commercial indicators for 2 years or 2. Okay, so the first one is the percentage return on earnings equity. Okay.
947 loves you.
Let's go to
all the crazy shit I did tonight. Those will be the best memories.
okay, so return on earnings equity. Okay, the formula for the return on earnings equity is net profit after tax divided by shareholders' equity, multiply your answer by 100.
I just wanna let it go for tonight. That would be the best therapy for me. Hey, hey, yeah. Hey, hey.
Okay, so it was 16.3% in the previous year, and I calculated 26.5% in the current year. So let's see if I've done the calculation. Okay, let's just do the calculation. Yes, on my left side, right? Like that. Okay, so the return on equity calculation. Okay, so the return on equity is the net profit after tax. Okay, so the net profit after tax was 861,000. Okay, and you're going to divide it by average shareholders' equity. Okay, so average shareholders' equity would be the shareholders' equity of the 2 years added up and divided by 2, so 3,345,800 plus 3,156,000, okay, divided by 2. The answer, the whole answer is going to multiply by 100. Okay, and that's how I arrived at my answer of 26.5%. Okay, the next formula we need to calculate is the earnings per share. Okay, so the earnings per share was given to you at 56 cents, and we need to calculate it for the current year. Okay, for this I got an answer of 94 cents, and I'm just going to show you again on the side how I would have done earnings per share. Okay, so the formula for earnings per share is net profit after tax, same thing as we used above. Okay, divided by the number of shares issued at the end of the year. Okay, so the number of shares issued at the end of the year was 920,000 shares. So it's divided by 920,000, and you multiply your answer by 100 because you need it to be okay. And that's how I arrived at the answer that I have. Okay, and we round off the answer. Okay, so 94 cents. Okay, then the next formula we calculate was the return on total capital employed on how dividends per share was given to you. Okay, the dividends per share is 33 cents and 5 cents. The next one is the return on silver and gas
It's the
load.
947 Breakfast Club.
Okay,
Monday
this is
to
given
Friday,
to 21.2%.
6 to 9 a.m.
We have been having such a good time just connecting with South Africans around the world who are experiencing the COVID-19 in another country, who are experiencing different,
It's very interesting. Yeah, it's interesting how different it is around the world, isn't it?
And now I want to go to perhaps the cleanest city I've ever been to, but also the most expensive. Are you listening from somewhere across the world? We want to catch up with you.
1,230,000, and the interest is 135,000. So when we say net profit before interest and tax, we're going to take those two figures and get them. The 1,230,000 plus 135,000 interest. So we're going to divide this by the
To Singapore we go.
equity
Good morning,
and
Samantha,
the
Laura
loan
K.
Okay, so these are the
Good
figures.
morning,
The first two
breakfast
figures
team.
are shared
How are you guys
with
doing?
You
the
are
here.
so good.
And the next two
Singapore,
figures
what
the
are you
loan
doing in
balances
Singapore,
for
Samantha?
Are you going to
Singapore,
multiply your
trying to
answer
escape
by
coronavirus
100? Which
unsuccessfully.
one
I'm
is
actually
the
here
percentage?
with my
Okay,
band
these are the
recording
figures
music.
within the diagram.
Oh,
To
yo,
get a final
wait a minute.
answer,
How long have you been there?
33%. Okay,
So I have been here since the
32.9
Monday
or
before South
33%.
African lockdown started.
Okay,
But
so
I
that's
was
how we
here in
calculate the
January
return on
when
total
coronavirus
capital
actually was announced
The
to the
next
world.
one
So
is
you were
the
ahead.
calculate of the net
You were
equity
I was
ahead.
ahead. I was
per share.
in Singapore, and then it came to
The previous
Singapore,
year,
and I freaked out, and I didn't
315.06,
think it would come
and
anywhere
the current
else, and I
year,
thought it would just stay in Asia.
360.7.
So I left.
Okay, let me show you how
And
to
I went to South
calculate
Africa,
that.
and then
The
it came to South
current
Africa,
calculation.
and then everything shut
Okay,
down
so
there.
net
But Singapore
asset value
wasn't shut
formula.
down at that stage, so I came back to
You
Singapore.
should know this by
And
now, but
now
it's
everything in
shareholders' equity
Singapore is
divided
shut
by the
down,
number of
and the whole world has
shares.
gone
Let
crazy.
me look at your
So,
question.
Are
Shareholders'
you
equity
then admitting
for the
that you
current
brought us
year.
the virus? Because you
3
came,
million
you got, it was in there, then you
345,800
came here,
divided
then
by
you went left.
920,000 shares. You
No,
multiply your answer
I
by
most
100
certainly did
because you
not
want to
bring
get
the virus.
10%.
I was
And
there.
that
I
will
was
give
in
you
South
an
Africa
answer
for 2 weeks
of
before the first case was
363.7.
found. And I
Okay,
was
so you
The
were
formula
here.
after
staying
that
at
was the
home.
debt equity
I was
ratio.
isolating at
Okay,
home.
Okay,
I
and
wasn't
that is
going
given
out.
just
Because you know it takes 2 weeks for the
0.1
virus to know
and
that.
I
Takes
calculated
14 days,
I'm
yeah.
just saying, Samantha. So now wait,
Okay, so
Samantha, you
remember
were here in Cape
to
Town
calculate
recording
debt
because you were a
equity
recording
ratio. The
artist,
debt
right? So
equity ratio
then
is going to
you
be
panicked
below
because you
here.
thought then it means your album is
Debt
going to get
is to
delayed if
equity.
everything shuts down in
Debt
South Africa.
is
Let me go
your
back to
loan.
Singapore, who've already
Okay, so in the
experienced
current
the
year, the
virus,
loan
so
amount
I
is
can continue,
1.5 million.
recording
Yes.
music with my band.
Okay.
Is your band
Yes,
South
yes,
African?
Singapore
shareholders
wasn't on
equity for the
lockdown.
current year.
Ooh, your
Yeah, but
calculation.
now it is. So I flew
3,935,800.
back
Okay, you're just going to divide
because
both
South Africa
sides
was
by
going to go into lockdown. I couldn't go into any
3,935,800.
studios in South Africa. So I came
And
back
that
to
will give you
Singapore
the
because they had
answer that
really handled the virus really well at that stage. They had a very
It's
small number
Singapore.
of cases. And I'm quite a high risk individual as well. I've just
So
recovered from
0.4
TB,
is
so
one.
I really didn't
The
want to
formula
get it. So I
after that,
came back to
current
Singapore,
ratio was
and then I was
given to us with
quarantined
no
in Singapore for
calculations
2 weeks.
required.
And the day that my quarantine finished,
Okay,
they
and then
put
the
Singapore
last
on
formula
lockdown.
was asset ratio.
Oh, no.
So you haven't recorded any
Calculated,
music
and the
then, I
previous year
suppose.
was given to
I
us.
have,
Asset ratio
because I
0.6
am
is to 1.
quarantined
And
in
remember the way we get
an
the asset
apartment with a
ratio
recording
is we take
studio.
current
Right.
I've
assets
got a microphone here,
minus
instruments, so it's
inventory.
actually great.
But obviously, from this whole experience, you
So that should
must be
have
an
been
expert in the future at evading an X.
900
You know,
minus
I think that's one skill you've definitely
900.
picked up.
Yeah, I'm an advanced traveler. So yeah, should we talk about what it's like in
Okay,
Singapore?
and then on the other side we get the
No,
current
wait.
liabilities.
Before we get there, Samantha, because now I know
889,000.
everyone that is
And
listening.
you just calculate
They're
that
like
and
musicians.
get
She
that.
sings. And
Yeah, we
I
want to
mean-
hear a song.
And I mean, you've been
Okay,
on a world
that
tour between
was,
South Africa and Singapore, all because of this talent. So now we want to hear if all this trouble is actually
Explain how the
worth it.
financial planning and risk of the company has changed from 20.1 to 20.2. Was it wise for Alex to take this decision? Explain facing two financial indicators in the answer. Now, financial planning and risk is all about the loan and the equity. So the first ratio you have to calculate that we have to look at is the debt equity ratio. Now, if you look at our debt equity ratio here, it's actually increased
Samantha,
from 0.1
during this period, have you written anything about the corona and the COVID-19 and how you're feeling and, missing home, missing someone?
1 to 0.4 is to 1.
I have.
But
I
it is
keep
still
writing
below
about, like, I keep
0.5 is
trying to
one,
do
which
parody
indicates
songs,
low
and my
quality.
band is just like,
The next
don't
one,
do it.
so
Not that kind
the loan,
of band.
remember the loan was increased by
Real
1.2
artists.
million
But-
rand.
but back in January already, we were like thinking, bye, Corona, and walking around and doing stuff. So, it has very much been there. But it's very difficult. It's difficult to do things and sort of not be insensitive. And, it keeps evolving. At first, it wasn't that serious, and it was just a flu. And then it was, now we know how serious it is. So, we are writing stuff during this time, but we kind of aren't trying to write about Corona. We're just writing about
life.
You also say that 24 people had their work permits revoked yesterday in Singapore. What did they do?
Yes. So they were loitering. So basically they were outside of their place of residence and they were just hanging around on the street. There's a lot of CCTV in Singapore. These people have a jack. If you spit on the pavement, you get a fine. So these people were outside, they were loitering, they were seen on CCTV to be like not going to the shops. They weren't going somewhere specifically. They were just hanging around, and that's how you can spread the virus. So they all had their work permits revoked, and they are barred from ever entering Singapore again. And may not ever come in.
So as soon as the lockdown is, that ban lifts, they're going to put them on a plane and say, NR, never return.
Say yes or no, right?
Yeah, they might have already put them on like a ship or something. I'm not totally sure. The media's not 100% like
Samantha, Singapore is a very expensive country. How are you staying afloat financially?
Return on equity is increased by
10.2%. I mean, well, the expenses aren't that high because you can't go anywhere. You can't drink anything. You can't there's nothing really to spend money on. I have got some savings, which is, great, but I think that all of us, although we're not earning money, I think that we are all we can't buy stuff. We can't buy things except for the essentials, which is in a way a really great thing for everyone. I think we're all asking ourselves, what is essential? What do we really need?
And I suppose when you run out of money, you're just going to go outside and loiter so that they can send you home on their time.
Yeah, look, I was supposed to be coming back. I was only supposed to be here for 1 month, but now that South Africa's lockdown is extended, there are no flights back. So we'll see when they open up the flights again.
What a hectic.
Yeah.
This story is insane. Like, it's insane.
You're stuck in your room and that's it.
Well, I mean, I'm pretty lucky to have like a guitar and a microphone and all that stuff. So things could be a lot worse. There's a lot of people who are having their salaries slashed in Singapore by 30%, I've heard from various people. They've also put a ban on, you can't buy more than $30 worth of things at a supermarket, which is like 300 Rand. So if you go to the supermarket, you have to like add up what everything will come to, because you're not allowed to spend more than $30, which is, I don't know if that really works, because then you're going to the supermarket more often.
Samantha,
I guess it's to stop people hoarding.
I just want to just a note there. Since you left, it's not 300 Rand anymore, 600 now. We slipped against the dollar so hectically.
Samantha, we look forward to attending your concerts when we are allowed to one day again, when there are events one day again, and when you
will have backstage tickets.
Thank you so much, Samantha, catching up with a South African living in Singapore, and quite an interesting story. A musician who came here, then went there, then came there, and now she's stuck somewhere in the world.
Exactly.
Now she's stuck there, but we cannot wait for her to come back.
Okay, so the members of the company earn the earnings per share amount of 94 cents, but the government per share is only 33 cents. That means that they half their some of their profits for the future to then distribute all of the amount in the dividend. And then 4.34.11, the price of the share on the JSE on 31st March is 280 cents. As a shareholder, what concerns have you raised at the AGM? How do you think today to respond to your concerns? Explain. Okay, so the question we would ask is, why is the net asset value higher than the market value? Okay, so the net asset value is an internal valuation based on the equity that's in the company. Okay, that's what the net asset value is. Remember, we calculate the net asset value using figures from the balance sheet. The market value takes other external factors into consideration. So that's the difference between the net asset value and the market value. Okay, so what is the profit or loss in selling the share in the stock exchange? So your personal profit or loss is based on the price for which you was paid for the shares when you bought them. Okay, so for example, if you were in the past, you may make a profit. But if you are a new shareholder, then you will make a loss. So 4.34 at the AGM, the directors announced that they might want to issue all the unissued authorized shares as soon as possible. What questions will be raised at the AGM about this idea? Right? So if we look at our ordinary share capital now, 920,000 ordinary shares were issued and the authorized shares were 1.5 million. So the number of shares is thinking of issuing 580,000 shares. Shares are issued when money is required. Why is additional finance required? Are they planning on expanding or purchasing more assets? Are the directors concerned about liquidity of the company? If additional shares are issued, shareholders' dividends will decrease and the shareholding of each shareholder will be diluted. 4.34.30. In 31st March, Dell shares currently own 65% of shares issued on 31st March. How many shares would you have to buy to retain control of the company? If a minority shareholder, would you object to this? Explain. Okay, now, Dell shares currently owns 65% of 920,000 shares. Okay? The authorized number of shares is 1.5 million. I'm just putting out. Okay. So he currently owns 598,000 shares. Okay, so this is his current shareholding. Okay, so this is his current shareholding. Okay, so 65%, he is a majority shareholder. Okay, now the authorized shares is 1.5 million. So if he wants to remain a majority shareholder, okay, he'll need to own 1.5 million shares. So 1,500,000 shares times 50% plus 1. Okay, and that will give us 750,000 in 1 shares. Okay, so how many more shares will he have to buy if he wants to remain a majority shareholder? Okay, so how many shares must he buy? Will be 750,001 minus 598,000 shares. You need to buy 152,001 shares in order to remain the majority shareholder. Okay, so you can say that you wouldn't mind, or would you object? You can say no, he's already a majority shareholder, so it's not going to change much. Or you can say yes, that you would object, okay, in order to change the company's governance structure, right? Because if you're not happy with being a majority shareholder, then you could object. 4.34.14. One of the directors feels it would be a good idea to give 2,000 shares each of the 50 employees instead of selling them to the What reasons would you have to suggest this? Explain. To provide an incentive and motivate the employees, to avoid a cash outflow from bonuses. Okay, those are the reasons. Okay, then 4.34.15. Explain why it is important for this company to be audited. All companies need to be audited according to the Companies Act. Shareholders rely on the published financial statements to make important decisions, and therefore the financial information must be reliable. 4.34.16. This company has provided sponsorship to certain welfare organizations and disadvantaged schools. Explain why and how the directors should highlight this when it prepares the financial statement. This information is going to the directors' report. Okay, it's also in keeping with the Clean Code of Corporate Governance with regard to social responsibility. Creates goodwill for the company, can even increase the share price. Okay, there's also a tax benefit for donation. So those are the important things you need to pick up. Okay, so I'm going to put this question in the Dropbox under for today's activity. please go through it. Please make sure that you complete your workbook and also that you understand it. If you have any questions, please ask. Thank you and goodbye.